Good morning, traders. This is Chris speaking with the video analysis where I take a look at the triangle chart patterns that dominate the major currency pairs at this moment. Specifically, the euro dollar, pound dollar, dollar yen, and AUD USD will be on our focus. But first of all, please be aware that this is intended for a global audience and may not be suitable for everyone. To find out more information about details and conditions, visit animalmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only, and by continuing watching this video, you agree with this disclaimer. Good, let's start with the pound dollar weekly chart, and you can see last week was a strong bullish candle. Is this a hook back for more downside or a true continuation of this upside momentum? That's something that remains to be seen. If we do continue higher, then the next target could be, for instance, the 50 fib perhaps, or more likely the 61.8, which is the next Fibonacci retracement level of this entire downside. In that case, we would have a bullish zigzag, something like this, after which a downturn at the fib is most likely possible. So for that scenario to happen, we would need, I think, a break above last week's high or a slight retracement. Both could be bouncing spots for more upside, and we could see that continuation. Now, in general, it's important to note that there is a FOMC statement on Wednesday, which could have an unknown effect on the currency pairs, of course. So price could maybe stall a bit before that news event and increase in its volatility after that news event. Looking at the daily chart, you can see the price has already broken above this resistance level, and in that regard broken the triangle to the upside, and we can see perhaps a continuation up to test the resistance levels like 157 and 158. So at the moment, this is a bullish break of this triangle to retest those levels. If we zoom in even lower to the 4-hour chart, you can see that this is an uptrend at the moment as we are speaking. There is one slight pattern here, a rising wedge pattern that could indicate a potential stall of this uptrend. But as long as price stays, I would say, above this 4-hour fractal 154.70, I remain bullish even though this chart pattern is appearing. So 154.70 is kind of my invalidation level. If price breaks below it, I start to become slightly bearish. As long as it stays above it, considering the strong weekly candle of last week, I remain bullish. So from that point of view, if price retests, for instance, this bottom of the trend line and the retest the 155 area, the 7086 fib, this support level, these broken tops, these bottoms, it, in my opinion, is an interesting potential for a bounce with a relatively tight stop loss, considering the validation level is so close by, and a potential to bounce perhaps all the way up to 157. As I already said, that's a daily top still present. So from that point of view, an interesting reward to risk potential at the bottom of this channel at 155, 155.20 perhaps, roughly in that area. That's something I find interesting from a reward to risk potential. Will price bounce at this spot? Of course, I have no idea. I'm not a fortune teller, but from a reward to risk potential there, it looks interesting for an upside potential. All right, next one on the list is the dollar yen 1-hour chart. And that too is dominated by a triangle pattern. In fact, just like the euro dollar and AUD USD, we'll see just in a second, the dollar yen has this 1-hour support line and has clear 1-hour resistance line. If one of these two lines breaks, there's a good chance for a breakout, either a bullish breakout above resistance or a bearish breakout below support. So from that point of view, these two trend lines, I think, are the most important dominating factor on these charts. On the 4-hour chart, I see more of a resistance than support because of the fact that the resistance is more set in more concrete, has more hits, and has been more confirmed. But even a support line like this on the dollar yen that I just added is possible as well. So from that point of view, even a 4-hour chart pattern clearly visible. So what kind of breakout targets are possible? What price breaks to the upside? 61.8 fib, for instance, would be what I'm targeting at 124.50 for the moment. If it does break to the downside, then 121.50, perhaps 120.30 are the minus 272 and the minus 651.8 targets to the downside. Before I show the AUD/USD and EURUSD, please be aware of these webinars this week. Nenad tonight, weekly FX recap on the majors and his expert opinion on the triple EMA indicator. So take a look at that. Myself, I have the live trading lab and also strategy focus on Tuesday and Wednesday morning. And then Nenad and I together on Thursday evening take a look at stop losses and unbreakable rules on Thursday evening. And we have some very good tips and tricks there on Thursday that I recommend taking a look at. So I hope to see you in one of these webinars. The Euro-Dollar daily chart, and the daily chart here you can see the same triangle pattern present as the dollar-yen. And in this regard, I wouldn't be surprised if price still perhaps stays in that triangle today. But sooner or later, we are going to get a breakout. And from that point of view, I still expect a bullish breakout more than a bearish breakout. That has to do with the fact that price is still above the moving averages here on the daily chart. And the moving average is a 21 EMA, high, low, and close. All right. So from that point of view, I am expecting more of a bullish zigzag like this, and would expect price to go to, for instance, the minus 272 target at 117. Now that 117 level is important from another point of view too, because if we go to the weekly chart, you can see that same 21 EMA band here acting as resistance. And that's because, of course, the euro-dollar was in a major downtrend. So if I put a fib on this particular impulsive part, 117 is important not only because of the fact that it is a minus 272 target, but it is also a 38.2% Fibonacci retracement level. So, considering the fact that this is probably a wave 4 from a wave perspective, the 38.2 fib is therefore quite likely. And considering the confluence of Fibonacci levels, I'm expecting price to go up to the 38.2 at 117 and then turn around for more downside. And that could happen anywhere this month or next month, after which I would expect the downtrend to continue on the euro-dollar somewhere in July, August, probably max September, before we see the downtrend continue on this euro-dollar to go, for instance, like parity or perhaps even below parity, and continue with that downward momentum. The max retracement I would expect is the 50 fib at 120.80 before this downtrend continues. So that is the long-term vision. From the short-term perspective, it's all about this contracting wedge and to which side it breaks. I would expect more upside break, but you never know. Of course, we could still continue in this triangle and retest the shallower support line before bouncing up again. So I'm keeping an eye on both trend lines here to see what breakout seems more likely. And weekly candles are slightly bullish though, but all in all, it is all about these trend lines here, and I'm keeping an eye on those. AUD/USD has retested this bottom of 75.50, didn't break the bottom so far, despite this massive momentum to the downside. It was really rocking quick and with a lot of power, but ultimately, after bounce, continuation, bounce, still stuck in that wedge like the other currency pairs that we just mentioned. And this resistance line and these two support lines clearly dominating here and indicating the important levels. So if price breaks through the support, there could be a continuation of this downtrend, and price could start falling perhaps to the next support levels like 70.25 and 70 parity number, or not parity, but round number I should say. If it breaks resistance, then of course there's that rally potential to retest resistance up around 80, and that's also a round number. So in that regard, the same story basically as the other pairs, keeping an eye on the support and resistance levels, and would place fibs on this swing high, swing low, for instance, to look for targets to the downside, like 72.50, minus 61.8 target, or even use that same fib for Fibonacci retracement levels, plus add this fib for targets, and then you can see 79.50 one of the main targets where there are two 61.8 Fibonacci levels at the same spot. Thank you for joining this video analysis. Make sure to take a look at all the great info and analysis on the Admiral Markets website, and wish you all happy hunting and good trading. Cheers!